Good morning, good afternoon, good evening, everyone. I know we have people joining us from all across the globe. Welcome to the fifth Global Fakes Town Hall series. Uh, Today's town hall topic is centered around probably one of the most trending discussion that I've ever hosted in the finance, banking, and fintech circles, arguably not just in the United States, but globally. So the topic is on instant payments, real time payments, and it's probably being described as the most significant advancement to the payment systems in the United States in the last 50 years, which is more than my current lifetime. So I'm pretty privileged to have Keith Gray as a special guest. Keith has been with the TCH, which is the clearinghouse, for about 9 years. Just to give a little bit about background about TCH before we introduce Keith. The clearinghouse is a banking association and payments company of about 350 members, and guess what? It dates back to 1853. So pretty long history to the clearinghouse for folks who may not know. Clearinghouse actually manages the RTP network, which is the real-time payment network. It has been providing instant payments to millions of consumers and businesses. And guess what? No disruptions over the last 5, 6 years. And one interesting trivia that I read was, I think last Saturday, 22nd, TCH surpassed about 500 million payments milestone, which is a huge milestone. So yeah, we'll get to know more about that. But before that, let me introduce Keith. Thanks, Keith, again. Keith is the VP Strategic Partnerships and Product Development at the Clearinghouse. He is passionate about real-time payments and its industry-changing potential. He is based out of the country music capital of the world. Yes, you guys guessed it right. He's in Nashville, Tennessee. I believe he loves family time, outdoor activities like hiking. But I'll probably let him maybe talk a little bit about himself, a brief background, where he grew up, and perhaps a little bit about what he enjoys. I know he enjoys hiking, so maybe Keith, you should tell us where you went hiking last.
So thank you, Sadipta, for including me in this. Yeah, it's an exciting time to be in the payment space. I do like outdoor things, hiking, things like that. For those of you here in the U.S. That might be familiar, I spend a lot of time up in the Smoky Mountains, which are in the eastern part of Tennessee and western North Carolina. So I do a lot, especially in hot summer days like we're having here in the state, in the southern states. Getting up in the mountains is always a pleasure. Yeah, and thanks for the introduction. Thanks for including me on your town hall.
Great, thank you. So Keith, you've seen the evolution of instant payments, right from when it got started in the US, right? RTP was in the forefront. But one question that many of us has, right? And United States, right? The country which was the first to send man to the moon, right? 1969. That's long back, even before I was born. 1973, when Japan launched, I think RTP, right? I think it's called the Zengin system. And I think all countries, right, including India, launched, real-time payments probably a few years before, around the same time. So why did it take so long, Keith? Maybe if you could just tell us a little bit about the evolution of instant payments.
I may argue with you a little bit about, quote, taking so long. I think as in every country around the world, obviously we weren't one of the early adopters here in the U.S. of a new payment infrastructure. The Clearinghouse launched RTP almost 6 years ago now, and it was the first new payment rail here in the U.S. since we launched our ACH network 50 years ago now, almost. Which unfortunately, you mentioned that's beyond your lifetime. It's not beyond mine at this point, but I would say, infrastructure capability or the infrastructure requirements here in the U.S. are much different than other countries. We have 8,000 banks here in the U.S. and hundreds of technology companies. So it took us a little longer to get quote cranked up in the real-time payments world, but I would argue that we're have caught up very fast. And one of the advantages of not being the early adopter is we got to take a lot of it to take advantage of a lot of the learnings from other countries. So I would argue that with RTP and the rollout of FedNow, I would argue at this point that the U.S. has one of the strongest payment infrastructures in the world at this point.
That's great to know. Uh, the next thing that I want to discuss was, I think everybody has read about what are the advantages of RTP, right? What are the good things that it will bring, right? How it is a cool thing, right? But perhaps I want to kind of flip it a bit and talk a little bit about the apprehensions, the concerns, right? I mean, just to kind of be like the villain, right? So first, I mean, the things that I have kind of read about and seen, right? One is instant payments means faster fraud. Second might be it means the bank runs will become worse, right? And we have seen a few in the last few months, right? And then there are these concerns that, hey, is RTP like a digital dollar? Is it something like that? And the other concern is also around credit card, debit card displacement, right? So again, I don't want to package all of the apprehensions. Maybe if you could address, some of them that you might have heard more than what I just
You
tell
kind
you.
of threw them all out there. That's good. So and I've been with, as you mentioned, the clearinghouse since the beginning of RTP and earlier than that. So I was involved in everything from the planning to the launch and the broader rollout now. And at the beginning, I would say a couple of the main concerns you hit on were would faster payments result in faster fraud? Well, the good news here in the U.S. is it really haven't. Has not. Some of the other countries that launched, like Great Britain, had issues with that on the front end. Again, one of the advantages of being a little down the road is we were able to take advantage of their learnings, right? So we knew what to expect. We knew how to manage to that. At this point, the fraud on the RTP network, after doing over 500 million transactions now, is just fractions and fractions of a basis point. It's almost not even measurable. Part of that is because of just the nature of the network itself. As a credit push network, there is no debit capability. And I have complete visibility into the transaction on both sides. I push the money to you. I know I paid it. You know you've received it. It's cleared and settled literally within seconds. So there's no ambiguity with the debit or batch capabilities like where a lot of our fraud in other rails come from. So just the nature of the network is prohibitive to fraud. The other thing is the technology providers and the banks that are on the RTP network are doing a really good job securing the transaction on the front end. In any real-time payment environment, the opportunity for fraud moves to the front end of the transaction. You have to make sure it's sudipta on the other end of that device, right? And we'd already just technology-wise with biometrics and multi-factor authentication and a lot of things we were used to in other applications. We were already used to doing that anyway. So I would say the good news is it's not been an issue. We continue to manage to that and to monitor that and to continue to build tools into the processes, and as well as the banks and the technology providers stay close to it. So the good news is it's not something we've had to worry about. As far as displacing other transaction types, interestingly, other than checks, I would say checks and cash, every other payment type has been increasing here in the U.S., right? There's more ACH processing than ever. There's more wire processing than ever. And so I would say RTP has been cumulative in doing new transactions and creating new transactions as opposed to displacing other options. Now, what that looks like in the future, who knows? I know there's a lot of RTP use cases that where it just works better than other rails, debit rails, whatever it might be. So we may see that in the future, but at this point, I would say it's too early to tell.
Great, great. And one thing, Keith, is again, I've seen that or experienced, like you get used to the instant commerce or quick commerce, right, where you expect your deliveries to happen immediately, right? But some of the things you don't really need it immediately, right? So do you feel that there will all payments need to go into the fast lane, or do you think that there can be some which need to go through RTP and some can go through the slow lane, right? I mean the best example is when I order my groceries. I'm obviously used to, or at least my wife is used to, getting stuff immediately within 10 minutes, 15 minutes, right? But sometimes I'm okay getting it maybe after 2 3 days, right? Maybe it's giving me a cheaper deal. So
Yeah.
do you feel that even for payments, both will coexist, which is like the real time as well as the slow or the slow lane ones?
Yeah, yeah, that's we're definitely moving into or we're in the age of digitization, right? And expectations of consumers and businesses are different for many things, right? Like you said, some things I expect right now. I mean, heck, I can order something on Amazon and it can be delivered within the day, or I can take an Uber and just step out of the car without thinking about how the guy's getting paid, right? So some things, you know, our payment rails are just catching up to what consumers and businesses expect, right? However, in many cases, there will always be a need for alternative payment methods. We've always had multiple ways to make payments here in the U.S. That'll continue. RTP fits certain types of transactions, not only immediacy, but other things where payment confirmation and perfect timing and 24/7 has been where it's always available are big deals. So, but that doesn't necessarily mean there won't always be a place for debit type transactions in certain cases, credit especially, right? People are very addicted to their credit cards, right? And there will always be a need for very low cost transactions that you don't care when they get there, right? With ACH as an example. So like I said, RTP has been cumulative to this date. It has very specific benefits that apply to certain use cases, but we're very used to having choices here in the U.S. and I think that'll continue to be the case.
Great, great. The next thing is like RTP solves for different type of use cases, like you were mentioning, right? Account to account, peer to peer, right? And typically what I understand is how real-time payment evolves is it starts with a peer-to-peer kind of a thing, and then it moves to let's say a B2B kind of a situation, right? As in, first is like, even now if I see Venmo or Zelle, people are used to it, right? In terms, they don't know what's happening in the back end, but actually people are used to this thing. So my question is, and here obviously a lot of our audience are corporates, they might be from mid-sized companies, right? To them, Keith, right? Uh, what are your inputs in terms of how do you think for those corporates, for even mid-sized companies, will a B2B impact, right, their businesses?
Yeah, yeah. So RTP is being used for hundreds, maybe thousands of different types of use cases, whether it's P2P. And again, remember, RTP exists. I explain it like we're the plumbing or the infrastructure that all of those cool apps run on top of. And RTP enables P2P apps like Venmo to work better and Zelle to work better. So in the business to business space, um, oftentimes, and we're seeing a lot of growth and a lot of transactions happening driven by business to business use cases, and oftentimes the immediacy is not the big deal or is not the main benefit. Oftentimes, the fact that I have perfect control over when that payment gets made. If I owe a supplier tonight at midnight, I can keep those funds in my account until 11:59, and then I can transfer that money. With the money, I can send the information that the receiver needs to close that transaction, And so the data can travel with the payment across the same bank rate secure network. And I can control the timing of it. And I can get an immediate confirmation that it's been received, closed, and settled from my bank to their bank. So that whole transaction can happen in a no touch environment where nobody has, it all happens in a very automated way, system to system, out of my ERP system into their ERP system, and confirmed back. So, especially in a rising interest rate environment that we have here in the US, the fact that I can control the disbursement of those funds when I want down to the minute has been a huge advantage. And also the data capabilities of it as well, where oftentimes the information will travel through a separate channel than the payment, like an email. And then it has to be brought together and balanced up and integrated together. And RTP just makes that a very clean process. So, especially in the business to business transactions, we're seeing a lot of the use cases really driven by the fact that 24/7, I can use it whenever I want. I have perfect control, and I have access and can provide access to the information you need to close that. So it's one of the uh, from a volume standpoint, just because there's less businesses than consumers. Although I think I saw that over 150,000 businesses now have made an RTP payment. So here in the U.S., so that sector continues just to really grow quickly, and we see that as a very strong growth point as well. And on the banking side, that whole treasury and corporate area provides a lot of opportunities for improving the way they do business with their businesses, their corporates, and their treasury customers, um, and helps them drive additional fee income. And so you improve the way the businesses do business, and then you improve the fee opportunity for the FIs as well. So it's a win all the way across the board.
Sure. And do you also see like the whole accounting process being like shifting from, let's say, an accrual based accounting to real time ledgers? Because now that payments are coming real time, do you see that shift happening where uh, how the accounting is done is different?
Yeah, I would say that companies are adopting to that, right? I mean, you have as technology changes and capabilities change, you have to take advantage of that. RTP is very open to API driven transactions. And so everybody's moving to a more open type of platform as well, with open APIs and integration to both ends of the transaction. So we're definitely seeing that. But the truth of the matter is, it's up to the business how they want to handle it. RTP can run on the back end, can clear and settle immediately, can everything can get settled and immediately, and then the next day when the business shows up, they can close their books however they want. But it's totally up to them how they want to run that and how tight they want to be to match the timing of RTP.
Right, right. So I believe that real time payments will pretty much, what if I can summarize, right, will drive innovation in the B2B sector, because ultimately collections management, AR, accounts payable, everything kind of gets streamlined end to end, right? If I can summarize what you just said.
Yeah, and we continue to, run into more and more technology companies like yourselves, that because you have this new infrastructure capability here in the US, it gives you the opportunity to build different types of capabilities into your product offerings that can take advantage of this new capability that we have. And especially as more and more, if you're a corporate here in the US, and in that national corporate as an example, you can reach typically between 65 and 70% of your customers with RTP. So almost 65 to 70% of the account base here in the US has access to at least receive an RTP payment. So it gives businesses the capability of reaching their customers in a whole new way on the payment side of the equation. And frankly, it's something consumers and more businesses are coming to expect as well, right? Like I said earlier, I would say that the move to immediacy and digitization has been long underway, and now the payment infrastructure is caught up with it, where to match it, I would say.
That's great. So Keith, typically the audience here would also include the banking fraternity, right? So there will be folks from the commercial bankers, right? And I kind of feel, and what I was reading was uh, the banking community is kind of on the fence. They're kind of wait and watch. So what what is your message to commercial bankers, or the treasury management team of a bank, right?
Mhm.
What do you want to communicate to them about the instant payment rails, right, and its adoption?
Yeah, so I was, we have 350 FIs on the network now. That continues to grow every week. It's actually over 350, 350 something now as of yesterday, I think. And again, like I said, that equates to about 65 to 70% of the account base. And that continues to grow week by week. I would say that in addition to more and more FIs on the network, you have more and more transaction volume. So one is feeding the other. More transactions lead to more banks getting on the network. More banks getting on the network drive more transaction volume as they launch new products and new services that leverage RTP. RTP is a very straightforward implementation process on our side of the equation. The key factor for an FI that wants to join RTP typically is to identify your technology provider. We have 20 or 30 technology providers here in the US that can enable a bank on the RTP network, a bank or credit union. And it's the big guys like Fiserv and FIS and Jack Henry and many others that provide RTP related services. So pretty much every financial institution already has a relationship with a vendor that they can use for RTP. So my suggestion would be just to look at your vendor community, who you work with. It could be your core provider or mobile provider or payment infrastructure provider or payment hub provider, and just talk to them and figure out what your best avenue is for connecting to the network. Pretty much every FI that connects to RTP, other than about 30, connect directly through a technology provider that has all that already in place. Yeah. I would say if you're a corporate or if you're a business listening in, I would go to your bank and go to our website. You get a list of every bank that offers services on the RTP network. If yours doesn't, you might want to ask them about it and or check other banking relationships potentially. So, so usually you'll
Sure.
find a good option for you.
Great. Keith, I think there is a question from the audience. So if I may just read it across. Does the receiving bank have to be a TCH member for the funds to be applied
So,
instantly?
yeah, that's a good question. And there is no concept of a membership with the clearinghouse. There is, you have to be, both sides of the transaction have to be enabled for the RTP network. That sounds kind of simplistic, but that's it. So you have an originating bank and the receiving bank. And like I said, the vast majority of banks connect through a technology provider. There's a very simple onboarding process that you go through to enable yourself on RTP beyond the technology side of the equation. It takes a week or two on our end. So you get on the RTP network and then you immediately start receiving payments. There's enough transaction volume on the network now where any bank that goes live, sometimes within minutes, you see payments coming in. So you start seeing value very, very quickly on the receive side of the equation. And then what banks are doing is once they're receiving payments, they start figuring out how they want to leverage the send side of the equation, what products they want to offer, how they want, business related or consumer related, whatever it might be. So, but the good news is there's enough volume on the network where immediately you start adding value to your customers.
Great. Um, so we are in 2023 now, right? And if I fast forward maybe 5 years down the line, where do you see, like, there are two networks now? So maybe if you could tell us a little bit about how you foresee 5 years, 6 years down the line. What's the future for the instant payment rails in the US?
Yeah.
And yeah,
So right now, one of the big topics here in the U.S. Has been the fact that the Federal Reserve launched their product for real-time payments. FedNow last week, I guess it was. Um, that
20th. Yeah.
they're very early days. That's been a very good thing from the industry standpoint. It's something that a rising tide floats all boats, as they say, right? So um, I think it's too early to tell how the two networks or if the two networks will interoperate like we do with our ACH network and their ACH network. Um, I think it's too early to tell, even if we need that, because of the nature of both of those networks is so different. But I think what you're going to see over the next 4 or 5 years is new applications and and new types of use cases will continue to evolve on both networks. What I'm seeing is banks that are coming on to FedNow are already on RTP, and many times they come on both. If you're wanting full coverage across your account base now, as a corporate, as an example, you need to have access to both networks. That's the way it looks like anyway. Um, I think down the road, very quickly, we've been working on cross-border real-time payments. I think next year you're going to start seeing real-time payments between us and Great Britain to start. Probably some of our other big trading partners here in the U.S., Canada, and Mexico to our north and south, I think will be fast followers on that. So I think over the next 5 years, there's we're still very early days here from an industry standpoint here in the U.S. But I think we're really at that hockey stick inflection point where there's going to be a lot of new capabilities, new functionalities, and at some point when we're talking about payments, they all might be faster, smarter, and safer because of the new payment infrastructure here in the U.S.
That's great, Keith. So when I joined the fintech industry in 2016, I thought, that's pretty much it, right? Business to business to consumer. But I think there's so much to see and experience, right, over the next few years. So cross-border stuff like that, right? Even B2B adoption getting up. So I think it's pretty
Yeah.
exciting times
Yeah,
for the.
it's interesting. I've been in the industry for about 25 years, and starting with online spaces and web-based technology to mobile technology, then moving into payments. And it's like almost here in the U.S., like nothing new happened for a long time from a payment standpoint. And then all of a sudden, payments got cool almost, right? And there was a lot of new um, development and investment in the payment space in general here in the U.S. And it's exciting times for the capabilities that the new infrastructure providers, the new technology providers are able to offer that filters down to consumers and businesses alike. So, and I think, like I said, we're early days. I think the best is yet to come, almost, as they say, and it should keep guys like you and I busy for as long as we need to be, for sure.
Absolutely, absolutely. No, that sounds really exciting. So, Keith, I know we have like 1 minute 30 seconds. So, my last question is going to be something which you probably answered, but just to kind of summarize and end. Like if Keith was a chat GPT, right? Uh, and if somebody types it in, right? Okay, what steps do I need to take to harness instant payment revolution? What would be like one, two, three, four? That's my last question.
Yeah.
And we have like,
So
yeah,
if you're a financial institution, I would say reach out to your existing technology providers, reach out to us at the clearinghouse, to me. Typically, I can point you to in the right direction. If you're an FI, a good way to get started. Um, if you're a corporate, same thing, reach out to your financial institution and technology companies you use who might be leveraging real-time payment rails, and just find out what they're planning and their strategy. And it's a very fast growing environment. So things change very quickly and capabilities change very quickly. And that's all to the good of both financial institutions and their customers. We've learned a lot in the last 6 years since we launched this. And I would say that's to the benefit of those that are coming now. So things are much easier now than they were in the early days, even though it's always been a very straightforward process here in the U.S.
Great. Keith, I think we've just crossed the 30-minute barrier. So
Mm-hmm.
thank you so much. Really grateful that you could spend 30 minutes and enlighten the audience.
Yeah.
So again, can't thank you enough. And I'll definitely look to invite you soon to kind of, probably give some more updates what's happening.
My pleasure. Thank you all.
Thank you. Thank you. Goodbye.